I think China itself, I mean, yeah, I think as mentioned, this couple of months has been kind of characterized by the reversal of the momentum trades. And China itself does have its sense of the momentum trade, which is the dividend yield momentum trade. As long-term domestic yield continues to trend down, you see like the dividend stocks, at least the dividend-paying stocks, continue to really outperform. So from our side, from our intrinsic emerging markets team, we are really cautious of like kind of latching on to momentum, so we kind of really stayed away from these kind of like dividend yield the dividend yield momentum trades that was in China, which is all kind of really reversed in the second half of the year. And couple of reasons for that is that firstly, I think after the July and August, the dividends kind of paid out, so we kind of have a dividend kind of blind spot over the next 6 months. And another thing we could kind of attribute it to is that a lot of Chinese names, as particularly in the consumer and internet space, the dividend yields have kind of really caught up, like 5 to 6% to that of these traditional dividend-paying sectors in China. And if you look on a risk-reward basis, we think that just in terms of, we're very focusing on accessing intrinsic value. And for us, like getting the grips around the intrinsic value of like a state-owned bank or a state-owned utility, it's a little bit more difficult for us to really get around it versus that of an internet name or that of a consumer name. So the way that we kind of see it is that we believe that at this stage, the risk-reward, at least from our side, we think lies more into the stocks which have kind of like I guess kind of like a low base of growth, and at growth of a low base, and at the same time generating strong cash flow and paying out good dividend yields to kind of really carry us through to the end of the year before as we get more clarity after the U.S. elections.
We're looking at the China tech plays, and Alibaba is an outperformer today, up 4.25% as it has been added to the stock connect. Is this a good enough reason to get into the stock? Do you like China techs?
Overall, we do have an overweight position. We are overall underweight China, but we do have exposure to the China tech, to the China internet space. But if you could see from the four stocks that you kind of put out there, it's kind of really a rotation because the rest of the 3 stocks have been previously included in the southbound. And from us, it kind of seems like there's a kind of rotation out of these 3 stocks into Alibaba. So I think at this stage, it kind of really reflects the current sentiment of the Chinese market, at least from the southbound side. Like it will take more for incremental capital, or at least more positive news or positive economic momentum for incremental capital to kind of domestic capital to step into the equity markets.